Welcome, it's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler with your weekly Edge Show. Today, we are going to go ahead and take a look at the markets and where we closed the week relative to resistance support. I will tell you overall, we did end on a positive note. We'll get into that. And then beyond, look beneath that and uncover, and I'll share with you where that relative strength is taking shape, all with an eye toward helping you prepare for next week and beyond. We're going to take a look at some of those headline news items that drove price action last week, and then last up, viewer question of the week. And this week's question is all about how you can uncover strong candidates given the positive turn that has taken shape in the markets. So some of the news that did move the markets last week, certainly one of the more impactful items was news out of China that their manufacturing activity had grown the highest in about 10 years. Very surprising and very positive for two areas that I will share with you. Also, earlier in the week for the U.S., durable good orders did show that the economy is still growing. An overheated economy is not what the Fed wants, so we did see weakness in the beginning of this week. Later, we did see consumer confidence slipping on inflation fears, but most impactful was on Thursday, comments from Fed Chair President that talked about his thoughts on interest rates, and in particular that the rate hike cycle that is currently in place, he was anticipating that it could end before year end. And that was a departure from certainly many other Fed presidents that were anticipating an elevated rate hike cycle well into next year. So that spurred a sharp rally. Also, we did see that weekless jobless claims fell, and then services PMI data, that is purchasing manager information about the services industry, and that showed continued growth. And I will say, in a normally more bearish environment, this news would have pushed the markets down. And in fact, the markets were able to rally despite that. So it does show a potential shift in sentiment toward a more bullish bias. Next week, we will get very impactful employment data for February. That'll come out on Friday. And then earlier in the week, factory orders will be released for February. So from here, let's take a look. Where did the markets close for the week? Here we are with the daily price chart of the S&P 500, and a couple of very impactful notes here is the fact that this relative strength indicator here on the daily chart did dip into positive territory, and that's good news. We can also take a look at where the S&P ended relative to these key moving averages, and I do have a 10-day, that green line, 21, 50, and 200-day simple moving average that for me are really important in determining whether the markets are currently finding support, where upside resistance may be, and so forth. So this week, we did close above that 10-day simple moving average. That is very good news. The next area of possible upside resistance will be that 4,100 level. Very important longer-term potential resistance. If we can get up above that with this positive RSI, and we can see that the stochastics have now turned upward. Ideally, a move above 50 would indicate positive stochastics, but certainly overall, nice positive price action in the S&P 500. From here, let's take a quick look at the NASDAQ. Tech heavy, it did outperform this week with a 2.5% gain relative to the S&P's 1.8% rally. So also very similar dynamics with the NASDAQ breaking back above this 10-day simple moving average with positive relative strength indicator and the stochastics heading upward. So generally positive price action there as well. So we're going to drill down beyond that and take a look at the 12 or 11 sectors within the S&P 500. And that 12th metric will be the actual S&P 500. So those that are shown ahead of that S&P are outperforming. And then on this lower right quartile are your weakest areas. So up here in the forefront are two of the strongest sectors for this week. Basic materials, XLB, reversing a little bit of a downtrend there. That particular group was up 4.1% for the week. And then also industrials, XLI, a nice 3.3% rally. Both of these areas were positively impacted by that news out of China regarding their increased manufacturing activity. And then also selective areas, certainly within industrials, companies there are continuing to report earnings ahead of estimates. Moving forward, technology remains up here in the forefront. It did pull back with the markets, but take a look. We closed XLK, the ETF for tech, up above that 21-day simple moving average. So it is now above any kind of upside resistance here. And then your momentum, the RSI up here in positive territory. The MACD did not get into negative territory. So nice price action there with technology. So let's move down, and I will share with you another area that did outperform this week. It was Energy XLE. The group was up 3%, and you can see that it's just now trying to get back above that 50-day moving average, which would be constructive, coupled with a nice positive RSI. Very, very selective as to the areas that are working, but in the next segment, I'll share with you one of the underlying metrics that is used when identifying or looking at energy names. Also taking a look as we move forward at some of these really depressed areas, and we can see healthcare not looking healthy by any means, but it did have a nice end of the week rally. I'll share with you two areas there that are showing strength. And let's go ahead and do just that. We can move right into an area where I share with you some of the ETFs that are really very powerful as far as helping you embrace where that strength is in the markets, refining it beyond those sectors so that you can see where that sub-industry group movement is taking shape. All of this designed to then help you decide which areas to focus on as you put money to work, because industry group and sector movement of your stock accounts for almost 50% of its appreciation or depreciation. So here we are with that view on these ETFs, and I did want to point out USO. This is the price of oil, had a bullish engulfing pattern there today. That is one of the reasons that energy was able to rally, but it's also strong earnings among select areas. We can also take a look at another area that is on the move, not looking particularly bullish, but this is the DBC Commodity Index. So this is going to take into account those basic materials. And then also we did see movement in other areas as well in that commodity space. Semiconductors up here in the forefront, and this is a group very near and dear to my heart. When stocks in this area get moving, you can really anticipate nice outperformance. I do have two names on my MEM Edge report, and we'll be adding more this weekend because the sector did have now a positive RSI, MACD in positive territory, and we can see that it closed just above that 21-day simple moving average. Nice volume there. So another area that we want to be aware of is biotech, and biotech stocks have really sold off, certainly for the month of February. All of this about a risk-off sentiment among investors because of the lack of earnings in many of these biotech names, but it did rally quite nicely this week. So I'm keeping a close eye on this area as well, as it's another dynamic area once the group gets moving. So from here, I talked about identifying stocks that have pulled back with the markets. This is the NASDAQ again, and that are in the throes of reversing that downtrend, similar to what we are seeing in the broader markets. And first up, I will tell you that stocks that hit my watch list, that I'm on the prowl for these types of candidates, are going to be companies that reported strong earnings. They're going to need that driver as a backdrop to help propel them higher. And then also I want them to be in an area of the markets that is showing relative outperformance. So let's take a look at a couple of names. First up here is ANET. This is Arista network, and we can see the stock did report very strong earnings back here, 72% year-over-year earnings growth. The stock then had a subsequent rally in response to that, pulled back with the markets, found support at this 21-day simple moving average. But take a look, your momentum remained in positive territory with your RSI and MACD, and now we've broken back above any kind of resistance with the stock poised to trade higher. Another stock that was a big winner on earnings and pulled back with the markets is DraftKings. We'll take a look at a daily chart of that, and here we are with that gap up into a base breakout following the release of their earnings. Again, it did pull back with the broader markets, found support at this 21-day simple moving average. If we can just get up above that 10-day, that would be more constructive, but your outside momentum is in positive territory. Last up, we can take a look at EUBER, and this is Uber, and this was another big winner on earnings. It actually rallied into the report and then gapped up after coming out with numbers that were 300% above analyst estimates. Uber did pull back with the markets. It did break below support. However, the momentum stayed positive with this RSI remaining above 50. Now we have broken back above this 21 and 10-day moving average on relatively above average volume with your MACD in positive territory. So those three would be candidates. And for those of you that would like to be alerted to additional stocks that are in very strong buy zones, use that link below and you can trial my twice weekly MEM Edge report. Have a great weekend, everyone. I'm going to look for you again here next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.